Today's Thursday, January the 10th, and there hasn't been much happening this week that warranted really spending any time on video, but I thought today was important. First of all, let's look at FinViz. Because inflation was recorded at 5%, that sort of sent the market into a bit of a tailspin right at the open, the Dow and the S&P. NASDAQ took a little bit of time to respond to that, but around 10:30, the market started to move up. The Dow hit a peak and then moved back, but the NASDAQ continued to move up. You remember that article that I talked about last week that was on the McClellan Oscillator page that talked about the ratio of the NASDAQ to the S&P, which indicated that it looked like the NASDAQ was going to outperform the S&P, and we should have been in tech stocks. And that looks like that's what's happening. S&P, like the Dow, moved up, but then tailed off a little bit. The McClellan Oscillator is chopping right in the middle of overbought and neutral. Now, the last time that it was in here, we did take a bit of a drop, and it really wasn't, it wasn't a great time for the market, and we had this bit of a correction here. I'm wondering if we won't see the same again. Now, if we look at the McClellan Oscillator, the McClellan Oscillator continues to move higher. Just to recap, high, higher high, lower high, lower high, lower high, higher high, higher high, a little bit higher high, now a new higher high. And this would indicate that the S&P could be moving up. There's something else interesting on the McClellan page, and I'd like you to take a look at that. It's seasonality versus the Fed. And he talks about go away, sell in May and go away. And it looks like that may be the operative strategy, he's saying. But he talks a lot about the Fed. And the Fed will hold up the market or it won't. If you read this article, a very interesting chart here where he looks at the seasonality pattern, but he looks at that with the qualitative easing that the Fed put in starting in 2009. QE2, then we had a flattened period, then we had QE3. Flattened period went into an election, and then they tried to tighten, and look what happened to the market. Now we've had qualitative easing coming again after the COVID drop, but if the Fed starts to taper, could we have this happening again? Let's see if we find any indication of that in the charts. First of all, the volatility index doesn't show that. The volatility index is well into the safe area, the tranquil area, but its stochastic indicators say that that's reaching a bottom, and we have been at the bottom for some time. They should both be looking to turn up. The Dow Jones has not been able to make a new high since May the 7th. The NASDAQ, on the other hand, has done really well and should be making a new high of 14,073 shortly. And today was a pretty good day in that regard. Now, the S&P is looking a lot like the Dow, having trouble making a higher high. Now, you could say that it made a higher high, but that would be, a higher close, but that would be only barely more than May the 7th, same date as the Dow. If you look at all of the stocks that we're following, I'm going to go through them quickly and just see where they are relative to their cloud. Apple, struggling here. Abbott, actually doing quite well. IBM, finishing off this Gartley pattern. This would be the top of an expected Gartley. We're certainly getting there. So I bought another 100 shares of IBM yesterday. MP, pulling back. NEO, hitting the top of the cloud, pulling back. Plug, big disappointment. Plug has earnings next week. This is one stock where I'm thinking of just taking my losses for tax purposes and finding somewhere else to invest the money. And at the end of the video, I'm going to show you where I just might be looking to spin that stock into. SAVA, which is the biotech Alzheimer's stock. Square, stuck between the 50 and the 200. I'm still holding on to that stock. AT&T, I still think people are holding on to it for another dividend or two. U.S. Bank stopped at the 50, and I just mentioned this. Take a look at other banks. CVS, we haven't looked at CVS in quite a while, and there was a time when we were looking at it to complete this pattern, which would be a butterfly pattern. Didn't quite hit the 78.6 to make it a real butterfly, but it did finish a C pattern in the acceptable range of the butterfly. So we stuck in this target of 80, and then we sort of took our eye off it because it was supposed to have gained through its partnership with COVID shots, and that wasn't happening. We just didn't see any excitement. Now look at that. Now it's happened. And if we readopt that, look at that butterfly pattern, we can see that it is approaching 92, or it had approached 92, and now it's pulling back. So it may have finished that pattern. We just didn't want to get into it because we didn't see a quick enough return, and that's fine. So let's look at some of the other stocks that we looked at from time to time. Sono, do you see any reason in this chart to buy this stock? I don't. FIS, bouncing off the 200 and bouncing off the bottom of the cloud, possibly. Where did it find its resistance yesterday? Look at that. Chiku span on the 50 simple moving average. Is that an opportunity stock? Dollar General, is that an opportunity stock? Not sure. URI, we looked at that at one time. That's not an opportunity. WWR, don't even remember what these companies are anymore, but we were just looking at their charts and don't see anything exciting there. Let's put on the cloud and rejection at the bottom of the cloud. DDD, 50% retrace. Let's put its cloud on. And you can see rejection at the top of the cloud. QuantumScape, don't see anything exciting there. DNLI, that's a stock starting to break out. You could apply a Fibonacci here. Let's do that. And let's see if we've got two bottoms here. So that's a really good Fibonacci base. And where are we now in that Fibonacci retrace? Heading up to 68.1. So if you like DNLI, that could be a stock that you could ride up till 77. Do other analysis on it. Look at tip ranks. Look at FinViz. MP, we looked at. BABA, I don't see that as a stock to look at. Now, the other one I want to look at is SMTC. And how did I come up with that one? Let's go look at tip ranks. And I started by looking at what are the top 25 tip ranks analysts looking at. Jared Cassidy, RBC Capital, the top ranked analyst out of 5,000 analysts that they track. 84% success rate, average return 35%. He's a 5-star analyst. Let's take a look at what stocks he's recommending, and does he see any upsides? He sees Fifth Third with 4%, KeyBank with 5 or 6. There's nothing exceptional that he's looking at with really good returns, and he's in the financial sector, and I don't want to be in the financial sector any more than I already am. So let's look at Quinn Bolton at Needham, also a 5-star analyst, 77% success rate, 45% average return. Let's see what stocks he likes. And here's where I came up with the idea of Semtex. He says Marvel has a 6%, Semtex a possible 30%. And he's rated it 24 times as far back as March of 2020, when he changed from a hold to a buy, and he was right. It moved from that $32 price, and he's doubled his money now to $65. And he's still saying that it's a buy stock. So let's take a look at the chart. First of all, let's take a look at FinViz and see what FinViz says about SMTC. It shows that SMTC is in this channel where it hit the top of the channel, bottom of the channel, lower high, bottom of the channel, higher high at the top of the channel, bottom of the channel, top of the channel. Now it's going to pull back. Where is it going to get its support? Is it going to go all the way back, or is this the time when it chooses to break out? Look at the volume back here. The volume here just a few days ago, probably last Friday on this indecisive candle, was very high and the stock moved up. It could be that this is the time when it's going to break out, but let's look at it from the chart point of view. How significant has the Ichimoku cloud been for SMTC? 200 support, 200 support, 200 support. Sorry, not 200 support, cloud support, cloud support. Here's the 200 failure, but eventually support, 200 support. Cloud support, cloud rejection, cloud rejection, cloud rejection. We're currently at cloud rejection. Let's draw that channel in there. Let's look at the stochastics. The slower moving stochastic is moving up. The faster moving stochastic is moving down. That is in line with what we saw for the channel, where we could see a pullback from the channel. Let's put the channel in and let's look at where the pullback could occur on this stock. Let's go to our channel tool here in Motive Wave. And where are you? I don't know why they have it down here at the bottom. I don't know where it is. Come on, there we go. So let's put the channel in here. Let's see if this is the channel that FinViz was drawing for us. Let's look back again at the FinViz channel. Yeah, it was from this high. So let's go back and get rid of our cloud stuff, and let's just look at moving averages. And let's put in our channel, just as it was drawn by FinViz. That's pretty close to what FinViz was showing us, more like that. There it is. Let's take out some of these. Oops, I'm sorry. Let's put that back again. Let's just take out this one. And now where are we going to get our support? If we pull back, we should be able to get our support here on the 200. And you remember the 200 was support here, and the 200 was support here. So let's put in a couple of alerts. Let's put in one right here at its recent high, which is also the 27.2% Fibonacci, or what you would say is a 78.6%. Sorry, it's a 27.2 pullback after having done almost 50%. So it's going to get to 27.2 or 78. Anyways, the other one we're going to put in there is the 200. Here we're going to put in an alert, and we're going to say when price crosses an indicator, and the indicator we want is the EMA 200. Right there, the daily EMA 200, and we're going to let that trigger a few times. And this is going to be our signal to buy it if it holds the 200, or to buy it if it breaks above 68.76. So plug is one I would get out of next week after earnings. We'll talk about plug a little bit more over the weekend and why I would hold it until earnings, and then cover my stock with short calls and just get out if it goes higher. Take advantage of the short call, high volatility premium if it goes a little bit lower due to earnings. But plug is really, hydrogen now is just a long-term play. We'll look to get back into it some other time. SMTC is the stock that I would look to substitute it with.